remarks as sent by our president to us to open on his behalf because he's on his way. We are aware as the Youth League colleagues and comrades that the main goal, of course, of the Reserve Bank is to achieve and maintain financial conditions, the stability, which is very essential for a balanced and sustainable economic growth. We know that around 2000, SAP have adopted an inflation targeting policy framework with a target of 3% to 6%. So this framework, comrades, we know that as stipulated, of course, in the SAP Act, or as guided by the SAP Act, as well as the Constitution, the mandate of the Reserve Bank, we know that they are operating within that particular framework that is stipulated in the Constitution as well as the South African Reserve Bank Act. But what we have done as this Youth League on its 26th National Congress, we took resolutions, and amongst those resolutions are in areas such as the monetary policy, Gavin. And we were of the view that our macroeconomic framework can do more than just targeting inflation, considering, of course, our socio-economic challenges and the fact that over the past 30 years, we've used the framework. It has worked, yes, on stabilizing our economy and making sure that our purchasing power remains strong. We agree that as the Youth League. But however,
Comrade ANCYL, your connection is unstable.
Hello? You can't hear me?
We can hear you.
Okay. I'm saying, comrades and Gavin in particular, is that we understand very vividly the mandate of the South African Bank as guided by the Constitution and the Reserve Bank Act. However, we have been taking a lot of resolution as the African National Congress Youth Leagues from previous congresses and even the recently on our 26th Congress. You might have heard of nationalization of the Reserve Bank, which is some of the issues that were proposed by the very same young people, not because they are undermining what is in the Constitution and what is in the Act, but it's because of the frustration of how the economy is moving and how slow the macroeconomy is not supporting some of the economic policies and propositions that are made by the democratic government. Hence, we took a resolution lately in our NAC that we need to engage really with SAP and other economic stakeholders within the country to say, how can we expand the mandate of the Reserve Bank? We've done a lot of research within our NEC, and we've taken into account some of the papers that might have been published and discussed within different NEC, as well as collected a lot of literature around what has happened within India by the Reserve Bank of India in the 1949, where really they tried by all means to make sure that their Reserve Bank is within the hands of the state. We have seen, of course, what has happened in New Zealand, although, of course, it led to high inflation and that had dire consequences within the economy. We've known that, we're aware of that example as well. Of course, Governor, our argument does not undermine what you are currently implementing, and we understand that you implement what is within the Constitution. But we argue that SAP should consider including critical components such as employment in its mandate. Of course, similar to what the Federal Reserve Bank of America is doing, where, of course, in its dual mandate, which was established in 1977 through the Federal Reserve Act, where, of course, it address one of its first, it's one of its first mandate is to create employment and make sure that the employment is stabilized in the American economy. And we believe that South Africa can, of course, try to take some of the good elements within what other other reserve banks are doing across the country. For instance, in India, we're aware that one of the mandates that they've included in their reserve bank is the mandate, the developmental role mandate, where they are availing funds for, in particular, previously disadvantaged areas, and where they are putting more funds to innovation and small and medium enterprises. So we're saying, though we essentially, Gavin, applaud the work that SAP has been doing to stabilize the price and promote economic growth and exchange rate management, we strongly call for the scope to be expanded and to include these other components that we feel are very critical to us as young people, because we're experiencing a lot of high youth unemployment. We know that, of course, you have been always arguing that our economy has more structural underlying economic issues, unlike other, of course, economies such as the in the US. And correctly, those structural issues, we are aware that they are the results of government policies that were meant to exclude the majority of South Africans from decent work and to be in the strategic sectors of the economy. Hence, we call that our sub should be deliberate and must be deliberate to make sure that they include components that seeks to assist government in terms of trying to really change that structural background of our economy and move towards a more better structured economy that is able to absorb everyone. And hence, as the Youth League, we strongly argue that including employment in the mandate will signal a pivotal economic shift and a focus, of course, from that is pushed by the monetary position, and that will cascade as well to the fiscal direction of the country in the next, of course, 30 years. We're not saying this approach, Governor, should be exactly how America did it, considering these structural issues that you've argued in your address in UKZN in 2017 and your recent address in 2019 in University of Stellenbosch and the recent one in 2024. We know that there are those underlying structural issues, but we're saying the the inclusion of employment in South Africa can be accompanied by some preconditions and can be accompanied by other conditions that seeks to protect, of course, um, that mandate, so that South African Reserve Bank remain stabilizing the price, but also have this other component of employment with, of course, conditions that will suit the South African material conditions. We're not saying we must take the American approach as it were, or as bluntly as it is, but we believe that there's a discussion that must be uplifted that can change the outlook of the South African economy. We strongly believe that as the Youth League, supported, of course, by this evidence from the countries that we've quoted, and we are aware, of course, of the failures in New Zealand. But we're saying, as you've argued in your address in UKZN, that the solutions to South African economy are not straightforward, but we must be in a position to have experiments, but we can't experiment frameworks or programs that have failed elsewhere. But at the same time, we must not be afraid to do experiments that are going to take us out of the crisis that we're in, which is youth unemployment in South Africa, which is beginning to even undermine some of the gains of the democratic government. We're saying in the next 30 years, something ought to be done in complementing the good work that SAB is already doing of stabilizing the price. But we need to complement that work, expand the mandate to include employment, but it must be protected so that SAB is not expected to create that employment, but it should be some of the consent of the South African Reserve Bank, so that it's aware that in its target is and its concern is employment creation within South Africa. We know in the US, for instance, they monitor the non-accelerating inflation rate of unemployment, what they call NAIRO. We can, of course, develop our own framework as to what do we develop to make sure that we target that particular unemployment in South African context. We are saying South African Reserve Bank must be preoccupied with the research as to how we can do this, how we can feature employment and other developmental mandate, of course, as is the case in the South in the Indian Reserve Bank. So, in those words, comrades, we are opening this webinar, of course, on behalf of our president. Thank you so much, colleagues, and you are welcome. We wish you a robust and very constructive engagement with the Reserve Bank and the Youth League. I'm not sure if our National Secretary General has joined. If he has joined, we're going to give him to give his inputs. If he's not around, then we'll give the Reserve Bank governor to start his presentation. Comrade Sango, can you indicate if the SG is here so that we can give him to?
Yes, I'm here.
Oh, thank you so much, SG. It's your time now, Nopala. Then after you will give the governor. Thank you so much, SG.
No, thank you very much, Chairperson of our ETC. Greetings to you, member, the Governor of the Reserve Bank of South Africa, Mr. Khanyago, the comrades and colleagues who are in the webinar. I think, Chair, you would have covered what the background of the ANC Youth League's position, Governor, that we think that the Constitution, in its mandate to the Reserve Bank in 1996, would have just given a broad mandate of price stabilization, which we think that it therefore does not exclude the fact that there could be a policy introduction or policy review that also, without excluding this particular mandate by the Constitution, that there should be other measures within which we can give mandate, either as the state or, if you like, government and South African policymakers, in terms of ensuring that our economy does function and it works for people. You are aware, Governor, that we are engaging you at the backdrop that South Africa's economy has been characterized by low growth, rising unemployment, and increasing inequalities, which have got a legacy in apartheid, colonialism, and the pre-eras of transatlantic slave trade, which are the precursors to this reality that we find ourselves, wherein we argue, like the chair of the ETC is saying, that noting the underlying structural issues with the South African economy, but we think that there must be a debate in South Africa, particularly at your level and the level of Minister of Finance, that the Reserve Bank mandate should be reviewed to focus on growth and employment, in order that the role of the central bank or the Reserve Bank, if you would like, could also focus as the other central banks are doing, not just on price stabilization as it has been introduced in the early 2000 of inflation targeting in South Africa. That we can introduce also other frameworks that can be able to assist our monetary policy and in fiscal policy. Whether we say, that's why I was saying to the chair of the ETC governor, maybe the debate should be about how do we review our macroeconomic framework that would include monetary policy and fiscal policy, such that we are able to grow the South African economy in order that it works for all South Africans. As is, many debates have been there, and I know you are aware that others would have argued that there must be nationalization of the Reserve Bank. And at some point, I know it was the decision even of the conference of the ANC. We think it is merely ceremonial. Of course, it can happen when our fiscal, condition is improved, but it's merely ceremonial at this particular point because all the monetary policy instruments are in the hands of the Minister of Finance and yourself. And
recording in progress.
That if there could be a thorough discussion about this review of the mandate of the Reserve Bank, of course, from the point of view, yes, of government, from to yourselves as the governor of the Reserve Bank, and that you relay that to our central bank as a mandate of the Reserve Bank, that we could resolve the challenge of slow growth in South Africa. We can resolve the challenge of rising unemployment and inequality. In that term, we could utilize, for example, if we are to look into our fiscal policy, there is a view that we are in a fiscal crisis in South Africa. And as the Youth League, we say that fiscal crisis is caused by other policy shifts that we're not making, which we think that the Reserve Bank may assist the growth story of South Africa to improve, and the employment story of South Africa to improve. And I'm aware that the whole mandate or the instruments of the MPC are with yourselves, the Minister of Finance and yourself as the governor of the Reserve Bank, in how the MPC, the effects of increasing perpetually the interest rates and the effects that it has to the South African urban working class, the South African urban middle class, in terms of their bonds, whether you're talking mortgage and other forms of debt capital markets that they enter into, how that affects them, and then how that affects their buying power in the economy, and how that stagnates the economy and therefore creates this perpetual and spiral inequalities and unemployment. So we said we must come to this conversation, to have this conversation with yourselves, so that we don't see ourselves and yourselves merely engaging through media houses about what should be the review. Examples have been cited about how this would have been a failure in New Zealand, how this would have been a success in America, and how this would have been a success in other economies like the UK and so on. So we think that that conversation is very important in South Africa, so that we arrive at a point where what do we mean about the Reserve Bank focusing on employment and growth, and what could be the available instruments that the Reserve Bank can utilize, either to do direct financing in what we call productive sectors of the economy, capacitating also our DFIs and ensuring that there's direct lending also for SMMEs in order for them to be able to play a meaningful role in the productive sectors of the economy. And these are discussions that we think should not be in isolation with the central bank. It should not be just a discussion happening in isolation with the Reserve Bank. The central bank should be playing a very critical role, as it does, both in terms of research and in terms of instruments that could potentially work in ensuring that you inject capital in the economy, whether to the first tier, second tier, parties, in ensuring that our economy is stimulated rather than being stifled, by the measures that we see are creating what we call fiscal consolidation, and what other people are saying it's really stifling the economy rather than creating an environment where the South African economy grows such that we can grow our revenue base or fiscal base, that we drive our ambition of development and social change that we want to drive. We think that conversation cannot happen meaningfully outside a conversation about what should be the reviews done on our macroeconomic policy framework, particularly the monetary policy instrument. So that's why we said we think that we must have this conversation with yourselves, particularly yourself, then the Minister of Finance, and these will lead into productive rather than heterodox and orthodox arguments, where fundamentalists other people are fundamentalists to this side and others are on this side. That this conversation will lead to a meaningful, productive and resolutions to the challenges that we say we are facing as a result of not having these productive conversations. I think, Chair, thank you very much to yourself and the governor. We will come back when the governor has commented on our proposition. Thank you very much.
Thanks, SG. Thanks. Now we'll give governor. We only allocated an hour to the webinar, colleagues, and our webinar can take up to 100 people. Those who didn't end, I will of course record the recording and then try for them to engage even on our social media platforms. Thank you so much. Greetings to the NEC that have joined us. Governor, we're going to give you, and then after you, we're going to engage your inputs. We'll give questions and answers to everyone in the chat, and then close the webinar. Thank you so much, Governor. It's up to you now.
Thank you very much, Chairperson, and thank you very much, SG. Can you, Avile, can you unshare so that I can share my presentation?
Okay, thanks, Governor. Comrade Tango and Comrade Osa.
Yes, Chair, we've unshared. The governor can now share the screen.
Thank you.
Okay. Let's see. Okay. Thank you very much, Chairperson, and thanks, SG. Thanks for reaching out to us. I think that your correspondence to us was clear in terms of what you would like to discuss. There were quite a lot of issues crammed in there, but we have tried to put them in a few slides so that we could then engage in a conversation. Let me also say that it's always difficult as to where one pitches the presentation. So if there are people who are trained in economics and they think I am too basic, just bear with us, because I just want to make sure that we are all at the same level in terms of the content that we are going to share. And when it comes to questions and answers, I just want to say that there is no such thing as a stupid question. Ask any question that you would like, and then we would address it. And lastly, to say that it is very important that young people raise these issues and raise it directly with us, because the tragedy of South Africa's policy discourse is that we do not want to be engaged in a conversation where we present evidence so that we could engage more meaningfully in the dialogue. Like we say in monetary policy, everyone is entitled to an opinion. You can express an opinion. What we insist is that you are not entitled to your own facts. We move on the basis of the same facts. So I will cover briefly the history of the SAP, the issue of the shareholding that you had raised. I would look at the group structure and the reporting structure of the SAP, and then I will get into what we do, because you've talked about the mandate. That is the primary mandate. There are other functions that the Constitution says we can do if they are ordinarily done by other central banks, but they shall always be subject to the primary mandate, and that they have got to be spelled up in a piece or pieces of legislation, and we will get to that. And we have raised the issue of the price stability, which is the primary mandate of the SAP. The SAP was founded in 1921, making it the oldest central bank on the African continent, and it is also the oldest in the Southern Hemisphere and the fourth oldest outside of Europe. The South African Reserve Bank, when it was created, like it so happens with many institutions created by government, the government actually didn't have the resources to establish a central bank. But there was also a very important thing at the time that it happened, that banks used to issue their own currencies, their own banknotes, and as part of the establishment of the bank, the SAP, the banks gave up their right to issue their own currency and were thus given a shareholding in the bank. But the shareholding was actually limited to 10,000 per individual or institution. The shareholders elect 7 of the 11 non-executive directors. The president appoints the other 4 non-executive directors, and the non-executive directors have no control over monetary policy or financial stability or regulation or supervision of the sector. The same goes for shareholders. Shareholders do not have any role in the decisions of the Reserve Bank, except for deciding on how much the auditors are paid and the appointment of the auditors thereof. There are 2 million shares in issue, and And the shareholders will have one vote for every 200 shares that they own. Shareholders are entitled to a dividend of 10 cents per share per year, limiting the maximum dividend to 1,000 rand, which basically means in total, when we pay dividends, we can only pay a total of 200,000 rand. If you are a foreigner, there are a couple of foreigners who had bought shares, you are not allowed to vote those shares. So foreign shareholders have got no voting rights. The SAP is not funded by the fiscus. It generates its own revenue from its operations, including managing the gold and foreign exchange reserves of the country. By law, 90% of the profits have to go to the government after we have provided for the reserves that the central bank actually needs. So sometimes I hear people saying that it's an anomaly that you have got a central bank that has got private shareholders. But in conversations, I say, well, it's also very much sounds like an anomaly that the one who does not have even a shareholding, government does not even own one share in the Reserve Bank, gets to take 90% of the profits. If we were to talk about the economics of ownership, that would be it. The one who takes the bulk of the profits is actually, for all intents and purposes, the owner of the institutions. How is this shareholding broken down? It's 2 million shares. 14% of the shares are held by foreigners, which means that those shares cannot be voted. And the other 86% are held by South Africans. Of that 86% that are held by South Africans, 1,416,000 shares are actually held by individuals, and that the South African institutions only own 306,000. And these figures are also published on our website. The SAP has got the subgroup, as we call it, has got wholly owned subsidiaries. We have got 2 currency producing subsidiaries. The first one is the South African Mint Company, which produces the coins that you keep in your wallets and your purses, and the South African Banknote Company, which prints the banknotes. Basically, the 10 rands, 20 rands, 50 rands are printed by the South African Banknote Company and is a wholly owned subsidiary of the Reserve Bank. We also have the Corporation for Public Deposits. The Corporation for Public Deposits holds deposits on behalf of government and a number of public entities. And we also have the newest, which is the Corporation for Deposit Insurance, which protects depositors should a bank fail, and this compensation will be up to 100,000 rands per depositor per bank.
Okay. What happened? Okay.
The reporting structure for us as the SAP, I have to account to Parliament. The Constitution, which gave us the mandate, that says that our mandate, the primary object, is the protection of the currency in the interest of balanced and sustainable growth, goes on to say there shall be regular consultations between the South African Reserve Bank and the Minister of Finance. I got appointed by the President after consulting with the board and the Minister of Finance, and as such, I regularly brief the President on economic developments. But the primary line of accountability is through the Parliament of the Republic of South Africa, through the Standing Committee on Finance. The sub-constitutional and statutory mandates, as I had said, that the primary mandate is captured in Section 324 of the Constitution to protect the value of the currency and underline that in the interest of balanced and sustainable economic growth. Understand that the authors of the Constitution understood that price stability is a necessary condition for balanced and sustainable economic growth, but it is by no means a sufficient condition. But they also understood that you cannot have balanced and sustainable economic growth when you have got instability in prices. And the other component of stability is, as the SG was talking about, financial stability. It is captured in the statutory mandate in terms of the Financial Sector Regulations Act to protect and enhance financial stability in the South African economy. The role and functions of the South African Reserve Bank are captured in a number of ways. You were saying that we must do research. Yes, we undertake economic data analysis, and we also do research. And in terms of the National Payment Systems Act, we run the National Payment System. This is one of those underappreciated responsibilities of the South African Reserve Bank that people might not be aware of. We ensure the functioning of the national payment system. The national payment systems, colleagues, is when you operate, whether you're carrying your credit card or you withdraw money from an ATM, without the national payment system, you will not be able to do that. And we run the backbone of the national payment system, and all the other banks connect into the international into the national payment system. We also administer the country's remaining exchange controls in terms of the Currencies and Exchanges Act. And in terms of the South African Reserve Bank Act, we act as a banker to the government. We issue the banknotes and coins. And then, of course, we formulate and execute monetary policy. The other important aspect is that we manage the official gold and foreign exchange reserves of the country. The country needs this to pay for its imports, to pay for its international obligations, and so forth. And in terms of the Financial Sector Regulations Act, we are responsible for promoting financial stability. And lastly, we license and supervise financial institutions, including banks and insurance entities. This thing that says recording, it seems to be freezing my presentation.
We can see it, Kevin. We can see your presentation.
Yes, it's frozen now.
Maybe if you can take it down and up again.
Yeah, that's what I'm doing.
Okay, Kevin. Apologies, comrades. It's just these technological issues. But we're following you, Governor, very well.
Okay, so so those are the functions of the bank. We have got our primary mandate. As I said, our primary mandate is that of price stability, and this mandate, South Africa adopted an inflation targeting in 2000. Prior to that, we were having something called an eclectic monetary policy framework, which applied and looked at exchange rate targeting, money supply targeting, credit controls, and so forth. It was not working. It didn't work. And in 1998, we actually were plunged into a huge foreign exchange crisis as a result of this eclectic monetary policy. The SAP, we adjust interest rates to steer the inflation, and the target, as you have said, is 3 to 6. But since 2017, we have aimed to keep inflation at the 4.5% midpoint of the range over time, which helps cushion us against shocks. The Minister of Finance sets the target in consultation with the South African Reserve Bank. And the panel on the right shows you the performance of inflation since the introduction of inflation targeting. And you can see that what we have seen is that although inflation has been fluctuating, it had been less volatile than we had seen in the past when we didn't target inflation. Same thing. Okay, I have a backup here. If this thing keeps on freezing, I'll try and unshare and see what happens. Okay, so we're targeting inflation, and the question that we have is, why is it important to manage inflation? Inflation is the change in prices across an economy. Our target measure of inflation is Statistics South Africa's Consumer Price Index, which tracks a typical basket of goods and services consumed by South African households. Of course, what have we learned? South Africans don't like high inflation because it erodes their buying power. And if you look at the graph on the right, shows to you what would have happened to the price of bread over a period of 20 years at different inflation rate. The top line, which is the purple one, which ends with 294, says that if we started with a price of bread at 17 rands 99 in 2024, by 2044, that price of bread at an inflation rate of 15% will be 294 rands for a loaf of bread. At an inflation rate of 8%, which ends with 84 rands that is what the price of bread will be in 2044. And if we were to go with the upper end of our inflation target band, which is 6%, you will see that the price of bread by 2044 will be 43 rand. And if we go at the current target, which is 4.5%, the price of bread will then be 32 rands by 2024. We had figured out what the problem is the comrades who are joining late. So as they come in, the screen here freezes. But let's get to the inflation story. What causes inflation? There is what we call a triangle a model, which was developed by an economist called Gordon in 1988. This is not to be confused with the late former Minister of Finance. This is a different Gordon. And the debate in South Africa would tend to say that inflation is caused by the triangle at the bottom left, which is cost push. Cost push inflation comes from supply side, for example, an oil or electricity price increase or supply chain disruptions. The top triangle is the demand pool. The demand pool inflation is caused by a hot economy where suppliers cannot keep up with demand. But the most important part of inflation is the triangle at the bottom right, which is built-in inflation. And built-in inflation is the most abstract, but arguably also the most important. What is inflation when there are no shocks and demand is balanced? Really, it would be zero, but people will always have expectations of what they think inflation is going to be and will then calibrate their own decisions about the economy based on that. Low inflation is actually pro-poor and actually lowers borrowing costs. The graph that we have here on the right shows the impact of inflation on different groups. Statistics South Africa breaks the income of South Africans into 10 groups. Decile 1 and decile 2 represent the poorest South Africans, some of them just depending on grants. And decile 9 and decile 10 represent the richest in the South African economy. This graph, what it shows is that the poor are the hardest hit by high inflation. So those poorest two groups of South Africans, the black line and the red line, you can see their inflation rate is as it stood throughout the period from July 2022 until through January 2024. Their inflation rate had been higher than that of the rich and higher than inflation as it generally reported, like the most recent print that had come out. And that tells you that low inflation thus is pro-poor, and a development strategy that would not entail tackling inflation has got to be anti-poor as it goes then. How does the monetary policy process work? The transmission of monetary policy to inflation, we set the repurchase rate, the repo rate. The repo rate then affects the rate at which commercial banks lend. It affects the nominal exchange rate. It affects the bond market and the equity market and housing prices. And importantly, it influences people's expectations of what that inflation will be in the future. The setting of borrowing rates by the commercial banks impacts on expenditure and investment, and through that channel impacts on total demand, and that impact on total demand feeds through into the inflation rate. The nominal exchange rate also feeds through to the inflation rate. How South Africa does import certain goods and services, and there are certain goods and services in South Africa that are sensitive to movements in prices overseas, and the movement in the exchange rate does affect the inflation rate. And the nominal exchange rate also affects the trade balance. The trade balance is the difference between what South Africa exports and what South Africa imports. And that in itself feeds through into demand, and it feeds through into the inflation rate. Expectations, as I had said, is also a very important part, because what people think inflation is going to be in the future affects how they set prices and how they demand to be paid in the form of wages, and that feeds through into the inflation rate as well. The decisions, I happen to be the person who announced the decision, and people think that is just me, is the Monetary Policy Committee. The Monetary Policy Committee is made up of the governor, the 3 deputies, the chief economist, and an advisor to the governors. Legislatively, in terms of the sub-act, monetary policy is the responsibility of the governor and the 3 deputies. So you could say that the MPC by law is 4 people. But in arriving at the decision, the South African Reserve Bank decided to pull in a few staff members, the chief economist being one, an advisor to the governor being one, to form part of the deliberations of the Monetary Policy Committee. The MPC meets every 2 months to set the policy rate. And the SAP is seen as one of the most transparent central banks, disclosing extensive details of its forecast, the thinking behind each of our policy decisions. The monetary policy process itself is a continuous process. We start with a pre-MPC where we agree on the assumptions that we will use to underlie the forecast that are presented to the MPC members. Then we have staff presentations and forecasts that are prepared. And then we have got an internal quality assurance through departmental debates to make sure that the presentations that come to the MPC are of an adequate quality. During the week of the MPC, we start on the Tuesday, we start presentations and forecasts that are presented to the MPC. On the Wednesday, MPC members would discuss the and decide on the policy stance, basically the policy stance being on whether we should increase interest rates, whether we should keep them the same, or whether we should cut them. And on the Thursday, we announce our decision and at the press conference. And on Friday, we have a round table with investors and analysts. And post the MPC, we publish the monetary policy review, and we have got community engagements via what we call talk to the sub forums. We go to all the provinces twice a year, and we also have a schools initiative, including the monetary policy committee schools challenge, where students from learners from high school come through and they make presentations and say what would they have done if they were actually running the bank. And then we also publish our forecast errors. We can't make decisions on yesterday's inflation or yesterday's growth. We have got to try and predict what inflation is going to look like in the future, how growth is going to look like in the future. And there might be errors in that forecast. We make an analysis of those errors. And if we need to recalibrate our models, we then recalibrate our models to make sure that our models are still fit for purpose. Inflation targeting has proved to be stabilizing. Before the inflation targeting framework, inflation was high and volatile. Inflation has usually been within the 3 to 6% range since, and while inflation expectations have shifted lower and become less volatile. Inflation targeting helps firms and households make better decisions about consumption and investment, which supports growth. And the panel on the right here shows you inflation expectations. Inflation expectations, that is a survey that we do with the Bureau for Economic Research. It surveys the price setters and asks them where do they think inflation will be in 2 years or in 5 years. And for a period of 9 years, 2 years ahead, inflation expectations are at 6.2%. We're at 6.2% in the first quarter of 2015, and 6.5-year expectations were at 5 years at the first quarter of 2016. And so you could see that the inflation targeting framework has stabilized people's expectations about what inflation will be in the future. Part of it is the simple reason that you then, price setters have confidence that the central bank will be able to control inflation and thus temper their own expectations of what inflation would be in the future. You have raised the issue of why don't we have a target of unemployment, and I can understand. Globally, generally, unemployment is actually low despite relatively high interest rates. South Africa is a huge exception. The graph here shows you the level of employment. The red bars is where the current unemployment rate is, and you can see South Africa is like having unemployment rate of 32% is structurally high. And the blue lines, dashes, reflect what the pre-COVID average, that is between 2000 and 2019, what the unemployment rate was. And in South Africa, it was 26.7%. And so what we would say in economic terms is that the COVID shock had actually led to significant scarring in the South African economy. So unemployment has not declined to what it was pre-COVID, which says that this was a very big shock for the South African economy. But You also said in your letter you'd like to discuss this. Should we be having a different target? Our target range of 3 to 6 is unusually wide, and at 6% upper limit is high compared to peers. The median target of emerging markets peers is 3%, and for advanced economies, it's 2%. A recent expert review of South Africa's monetary policy recommended a lower target. You are talking about a macro review. The National Treasury had been doing the macro review, both fiscal, and they also commissioned a paper on monetary review. The conclusion of that paper was that the South African monetary policy should actually be aiming for a lower target. The National Treasury has been leading the work on the re-examination of our target, and any changes will be clearly communicated. I think that on the right, just want to show the median, as I had said, the median inflation target for emerging markets is 3%, and we have spelled out the countries. Some of the countries have lower targets, but in the main, you could see Chile, Colombia, Philippines, Brazil, China, Hungary, Mexico, they are all at 3%, and South Africa is at the higher end with Egypt, Russia, and India. It's a very important point to bring to the fourth here, because in the case of Brazil, the target of 3% is a new phenomenon. It is something that was introduced when President Lula came back to office, and it is a new target for the Brazilian Central Bank that was set earlier this year. The red bars there just shows what we see in the advanced economies. Let me bring this to the conclusion so that we can be engaged in conversations and questions and answers. As the country's central banks, we have multiple responsibilities that are spelled out in various pieces of legislation. We execute our mandate without fear, favor, or prejudice, and we believe in transparency and accountability to the South African public. We do publish our annual report, which accounts for our achievements around June, and is available on our website. We produce a quarterly bulletin, a monetary policy review, a financial stability reviews, and a host of publications on payments, on fintech, and on financial regulation. And while participation in the annual general meeting is limited to shareholders, we broadcast the meeting on all our platforms, and you could easily follow the deliberations there. So, Chairperson, let me hand back to you. That will conclude the presentation, and I'm looking forward, as you have said, to a very robust engagement with the participants.
Thank you so much, Governor. We appreciate this. At least it tells that one of your mandates is to, of course, engage the public, and engaging one of the largest, biggest youth movement in Africa is one of the very important aspects, and we applaud the Reserve Bank to agree to this. It's very important because more than we have thousands of our members across the length and breadth of the country on VDs, on WADs, and they are going to appreciate this knowledge and engagement so that we shape the country together. We'll take hands. SG, I know you are having an engagement. I'm not sure whether you are still here, so that we can start with 5 hands, including yourself, and then Governor responds, and then we take other hands. I'm not sure if you are still around, Secretary General.
I'm around, yeah.
Yes, is your hand up? I know you've indicated that you would want to have some of the questions. So we'll take 5 hands, comrades, and then we'll allow the SG to leave if your SG time is pressing for your national management meeting. So we'll take yourself, SG. We see Comrade Onwabile, Mabelwana, Comrade Monwabisi, Paul from Poland, Comrade George, Comrade Zamaswazi. I think we have 5 now. SG, we'll start with you.
No, thank you very much, Governor. I think thanks for the presentation. I think as raised by the convener of the subcommittee. Governor, there just few issues. I think we capture the background, the mandate of the Reserve Bank and what it should do and all of that in terms of the Constitution. And I like the fact that you are making a point that by law, you should be 3 in the MPC. But by extension, because you want to expand collective wisdom within the central bank, you'd have included the chief economist, the advisor to governors, to the governor and the deputy governors. Now, at this point that we are sounding like a broken record on, Governor, I don't think you would have, for me, extensively clarified why we would not expand our mandate to target growth and employment creation. As you are saying that if you look into the Federal Reserve Bank of America, the part of their research component is to publish their labor or employment index, and we don't see much of concentration of the Reserve Bank of South Africa doing that. We don't see it shifting, like, post-COVID, almost all the central banks have shifted because of what you were raising yourself, that it has hit more the South African economy and particularly the poor in South Africa. Now, we don't see the Reserve Bank shifting in terms of its mandate to more developmental, as it's supposed to do, like other central banks are beginning to shift. The issue of ownership, we had raised it, that it will be ceremonial about this of nationalization now because of the fiscal condition of South Africa. We understand that 90% of the profits of the Reserve Bank come to government and all of that. But the issue about is this how the MPC's framework or pinches down into the poor in terms of your projections, and why the two areas cannot be targeted as part of your targets. That's the fundamental issue. Then other issues will engage you about in terms of your direct financing, which Americans are call it qualitative easing, in order to avail capital that can be injected in the economy. Thanks.
Thanks, SG. We'll take all the hands, SG, and then Governor will answer all the first 5, and then you can excuse us if your meeting has started in Limpopo. Can we have a Comrade Onabile?
Thank you very much, Comrade Abadia. Thank you very much, Governor. Governor, we want to say we have not seen thus far as the youth tangible measures taken by yourselves to protect the South African youth and blacks in general, and everybody in particular, from the exorbitant interest rates charged by banks in vehicle finance, bonds, and other various forms of credit. And this includes the unstable prices of insurance, the policies which discriminate and charges black people more, and other behaviors alike. We have also not seen, Governor, tangible features demonstrating that the Reserve Bank is taking measures to deal with inflation and the increasing cost of living in the country. And lastly, while it is believed that the Reserve Bank being nationalized will have a negative impact on its independence and autonomy, we as the Youth League Governor also believe that the bank has to be nationalized in order to align it to the broader agenda of having our country transformed to suit our majority, whom are poor. And the investor confidence argument is also, in our view, seen as a pocket knife concept to intimidate and discourage radical policy implementation. No, thanks.
Thanks, Comrade Onabe. So let's greet our president. I'm told he's in the chat. President, welcome. Thanks. At least you have settled now. We appreciate that. But he has indicated that he will leave very soon because of the pressing issues on the other hand. Comrade Monwabisi, can you come in?
Thank you very much, Chair of the session. I will not give a preamble, however, I'll just ask questions. Governor, mine is to ask more precisely on the policy adjustments for growth. Given the global economic uncertainty, what adjustments to monetary policy does the Reserve Bank consider necessary to foster economic growth that includes youth participation? The second one, it has to deal with the investment climate. What initiatives are in place that will be able to foster and attract foreign investment into sectors that can perhaps employ young South Africans? And that could also be facilitated by the Reserve Bank in order to ensure that young people play a pivotal role of participation within our country's GDP. Thank you very much.
Chairperson, I thought all the hands. Is that the 5?
No, we have Comrade Zamaswaz, Matwanzela, and then Comrade Loaz Mzuzwana is the last one. Comrades, can you come in?
Thanks, Chairperson, and good evening, comrades, and good evening, Governor. Thank you for the engagement. My question really has to do with probably the methodology that's followed by the Reserve Bank. In the last 18 months or so, when we were going through the cycle of interest rate hikes, quite a lot of the rise in inflation was driven by, external factors which aren't demand factors. So external factors such as the Russian war that was happening. I'm interested to know, Governor, with that in back of the mind, and when the inflation wasn't driven by demand, I'm interested to know why then the MPC pursued a continued increase in interest rates. Thanks.
Comrade Loazi?
Thank you very much, Comrade Chair. To the Governor, I won't repeat the other questions that the other comrades have asked. Mine will just be a short one. I just want to ask the Honorable Governor whether the position that they've taken as the South African Reserve Bank, is it to track the US Fed rate? Because I've looked at the analytics from Podera. There's an analytics company that does all sorts of calculations, and they've done the Reserve Bank interest rate versus the US Fed rate. If you look at the two graphs, they are quite similar. When the US goes up, we go up. When they go down, we go down. Isn't that counterintuitive, Governor, given that that does not take into account our unique position here in South Africa? Thank you very much, Chair.
Okay, thank you very much for those questions. Very important. I think that a question had been raised about mandate and a reference to the Fed. Chairperson, the mandate of the Fed reads something like this. Low inflation, promote maximum employment, and low long-term interest rates. You say that it's a dual. Actually, you could almost call it triple. But you seldom hear them talk about the low long-term interest rates. Why? Because the point of departure when interest rates are set is where the inflation is. You can't have interest rates that are below the inflation rate. You'll have a dysfunctional system. Intermediation will not take place. And so that is the point of departure. Earlier on, you referred to New Zealand. New Zealand tried to bring employment into the mandate. As you had said, when inflation surged, they ended up removing it. Quite frankly, the Fed at the moment is the one that has got an explicit mandate on employment. When you look, the Bank of England does not have that, the ECB does not have that, the Bank of Canada does not have that, neither does if we look at the developing world, none of the countries that I had put on the slide from Brazil to Colombia to Chile and so forth, they do not have that. But why? Why is this so? A part of it is that to drive employment, you actually need the multiplicity of policy levers which are not in the hands of the central bank. The central bank can contribute its bit. And as I had said, it says, our constitution says our mandate is price stability in the interest of balanced and sustainable growth. So we constantly have to take that into account, because if you have to decide what balanced growth is, you must then know what the potential growth rate of the economy is. And the potential growth rate is basically seen as almost the speed limit of the country. So when you said that inflation is not from the demand side, inflation is normally only from the demand side when the economy is growing faster than its potential. Call it faster than the speed limit. That is when you have demand push inflation. As I had said, and the last comrade who talked about the methodology of us looking at the demand said that there were shocks, and you're right. In 2022, you had the shock from the Russian invasion of Ukraine, which led to a ballooning of oil prices. You had global supply chain constraints, and quite frankly, the Reserve Bank started increasing rates in November 2021. The Bank of Brazil started in April 2021. And the only reason, even when we were increasing interest rates, just go back and look, it was more that we were reducing the amount of support that was being provided in the economy, because we were concerned that all of these shocks that we have seen, they built up. And so you're right, the central bank can't respond to a shock from the oil price or a war shock. We can't. And so what we do is to then look at those shocks and say, do these shocks lead to price setters changing their behavior? And if they lead to the price setters changing their behavior, we respond to that. And you will find in our thing, we will talk about second round effects. And then you are asking about the methodologies. In the monetary policy review that we released earlier in the year, in there we also released a number of measures of inflation. The reason we published those measures of inflation was to try and remove the shocks from there, so to see whether there are underlying pressures. And if we looked at those measures during the course of last year and during the course of 2022, it said that yes, we had this supply shock, but there were inflation pressures building up. That is what we were responding to. And the last comrade who talked about us tracking the Fed, well, the Fed only started increasing interest rates in 2022. We started in 2021. So the Fed sets policy for the US economy, not for the South African economy. But South Africa is a small, open economy. Developments that take place in the US have got spillovers to the global economy. And those spillovers to the global economy is what transmits itself into various economies, including the South African economy, through a number of channels. The first channel is the global activity, economic activity channel. To the extent that the US is changing policy because they believe the US economy is strong, we will take account of that. If they also think that is because the US economy is weak, we would take account of that. How do we then look at these things? The transmission then takes place through the bond market in the US. And if you look, and I hope that this is the thing that you were watching with Kodera, I hope that they didn't confuse the fact that the South African bond yield, which we do not control, tracks the US bond yield. And the reason is that the US bond is seen as what is called a risk-free rate. And all the other bonds across the world are priced relative to the bond in the US. We set policy here for the South African economy and not because we are religiously following the US. And SG, you said that we talked about direct financing and quantitative easing. I do not know why we would want to do that. The US did quantitative easing for a simple reason. Their inflation declined so low that it almost was zero. To try and counter that, they cut interest rate almost close to zero, to the point where interest rates were no longer playing a role in influencing financial conditions in the US. And when prices no longer work, you use quantities, hence the concept of quantitative easing. And the way in which it was believed it would work was that by buying those bonds, they will inject cash into the banking system, and the banking system will have no choice but to lend the money. And that seemed to work before COVID. But when you do that during COVID, people are under lockdown. That money just does the round, and it is that it is said led to a build-up of inflation in 2021 and 2022. The great inflation year getting into 2022 had to do with the fact that the stimulus that was done by central banks and treasuries to cushion the economies from the shock of COVID didn't take account of the fact that you had a lockdown, and because you had a lockdown, producers were not able to respond to the stimulus. And because producers could not respond to the stimulus, the only thing that they did was to increase prices, and hence a rise in global inflation. And the point that was said about the shocks is that those shocks were now building up and leading to demand pressures because demand had been stimulated, but supply has not been able to respond. And as a result of that, you had inflation thus building up. Measures to protect the public. I think that it's very important. And you say you do not hear at the bank. It's important to understand the design of our institutional setup. And our institutional setup, in as far as the financial sector is concerned, is following. The Reserve Bank is responsible for what is called the safety and soundness of the individual institutions. And safety and soundness, why? You want the confidence that if you have placed a deposit with a bank, that when you want to withdraw your deposit, you will be able to access your deposit. If you have bought an insurance policy, that when the claim is due, the institution will be able to meet that claim. How the institutions behave and conduct themselves is the responsibility of our sister institution called the Financial Sector Conduct Authority. But they also, too, they do not control the prices. Their responsibility is to ensure that the banks are treating the customers fairly, pricing according to the rules and so forth. It is the responsibility of the Financial Sector Conduct Authority. And of course, at the DTIC, there is the Competition Commission, which is meant to protect us against collusion, whether it is within the financial industry or it is elsewhere. And they have got the tools, they have got the instruments, they have got the power in law. That is their role. That is the institutional setup. What you can't do is to try and get all of these institutions to be trying to do the same thing and actually cause confusion in the marketplace. And so, but you also, comrade, raise an important issue about inflation and the high cost of living. As I have said, as central banks, we worry about the inflation rate. And the inflation rate is the rate at which prices are changing. But the cost of living is the cost of living adjustment. The cost of it is the price level, so to say. It's a level variable. So let's think of it this way. So electricity prices had been rising by 36%, 25%, and so forth. And your electricity tokens that you buy to reload at home are, for argument's sake, 100 rands per kilowatt. Eskom might have stopped increasing the electricity rate from 36%, and they are now only increasing it by 1%. But electricity is still costing you 100 rand. But the rate of electricity inflation has come down, if you get what I mean. There are only two prices that behave differently here. And one is the fuel price, and that's because it's linked to the exchange rate and is linked to the global oil price. So when the oil price goes down, the fuel price in South Africa goes down, other things being equal, whether the exchange rate has also strengthened. You will see that. So you will see both the change. So in the most recent figure, petrol inflation was negative. It was negative 8.6% about. And the oil price also, the fuel price also came down. So the level came down. But you cannot say the same about the other prices in the economy. A car might have cost 100,000 rands 10 years ago. And today the car is costing 500,000, 600,000. Inflation might be lower, but the car is still costing more. Yeah, I hope then you get to understand. So we can protect the public against the rise in the rate at which prices are rising, but we cannot protect the public against the price level, because when we talk of price stability, we are talking about stabilizing the prices at a particular level. And I hope now you get the gist. Putting to its logical conclusion, it would have said basically for you to keep the cost of living the same is that inflation should be zero. But zero inflation is dangerous too, because if as it turned out in Japan, the economy slides into deflation, you struggle to get the thing into deflation. So if you have deflation, is negative inflation. So if you get negative inflation, the producers might decide, I am no longer producing. So think of it this way. So I'm a producer of a cell phone. And I know that the price of cell phones is going to be coming down. You are the buyer. because you think that the price of cell phones is going to go down, you will decide, I am not buying a cell phone, I'm going to wait until it comes down. Then the producers will say, well, then I am not going to be producing because no one is buying. Then you end up with deflation. It is bad. It is bad to deflation, and that is why central banks will tend to define price stability as low and stable inflation, not zero inflation or negative inflation. Talk of been made of policy adjustments post-growth. Remember that when you talk of policy adjustments, we have one instrument of monetary policy, and that instrument is interest rates. And that is what we do. When in the middle of COVID, the president extended the lockdown over the Easter weekend, the Reserve Bank called an emergency MPC meeting, which took place over the Easter weekend, to cut interest rates to support the economy. Those are the kinds of adjustments you make when you are faced with a
cut
shock.
interest now and support economy now.
Comrades, order.
Okay. So you make those adjustments. And when we had inflation going up and we were adjusting policy because inflation was going up, we were stabilizing inflation. And when we saw that on a forward-looking basis, inflation is going to be coming down in South Africa, we started reducing interest rates. And these things have got to be forward-looking. We can't look backwards. We have got to be looking at the trajectory, going forward. And the question was raised about the investment climate and what the SAP does to promote the investment climate. Part of it is to make sure that we have got financial stability, that we have got price stability, so that it improves the investment climate. I joined a team. I was part of Team South Africa in Washington, New York, and London, talking to the foreign investors about the South African investment case. And it was a very positive thing. And those are the kinds of things that we do, that we engage with these investors directly. The Director General of the National Treasury and his team have just returned over the weekend. They were also out there engaging those investors and making the case for the South African investment case. And lastly, the issue of nationalization. And I just want to, I've made this point so many times, but for those who have not had the best benefit, let me just repeat it here. For a central bank to be independent, it doesn't have to be privately owned and it doesn't have to be state-owned. Let's also be clear. The Bank of England was nationalized. The Bank of Belgium was nationalized. The ECB is owned by the Euro area central banks. It is fiercely independent and is an inflation targeter. One of the central banks that is seen as the most fiercely independent was the Bundesbank in Germany, and it is wholly owned by the German government. So let's be clear. Nationalizing the bank will not change the mandate of the bank. The mandate of the bank is in the constitution. If you want to change the mandate of the bank, change the mandate of the bank. Go change the constitution and change the mandate of the bank. Don't come with a convoluted argument about if we nationalize, we will have better control. We have control as it stands now because the board is majority appointed by the president and all the executives are appointed by the president. It's a fairly straightforward thing. And the independence of the bank is enshrined in the constitution. So we have not raised the issue and said that if you nationalize, it's going to affect our independence and all of that. We haven't raised those. Our independence is in the constitution. What was raised was the fiscal cost of nationalization, which, Chairperson, you correctly pointed out right at the beginning. That is what we had seen. So we must not confuse the ownership with the independence of the bank and the mandate of the bank. The independence and the mandate of the bank are in the constitution. The ownership, you can go and change. And as I had said, we pay dividends of 200,000 rands per year. Quite frankly, we are having a 200,000 rands debate. That is what we are having. So I think I have dealt with all the questions, Chairperson. I don't know if we are left with 2 minutes. We said we are going until 8 o'clock.
Yes, yes. Thanks, Governor. We appreciate the questions you have answered because of time. So it means if you will allow us to have 1 or 2, we'll continue. But if you are rushing, we won't take those.
No, we can take 1 or 2. That's fine.
You can take 1 or 2. Comrades, do we have comrades who want to have hands? I know there are some things in the chat. Comrade also, Comrade Sango, can you help us with the questions in the chat? And then if we have 2 hands, comrades, with the comrades who are online, can you raise those so that we will close the session? I acknowledge the presence of our coordinator, Comrade Mo.
There's one question. There's one question I didn't answer. They said that the Federal Reserve publishes an index of employment. No, that is not correct. It is published by the Department of Labor in the US. And there is a reason for that, why it's published by the Department of Labor. The Department of Labor is the statistical agency. They compile the statistics. We do analyze employment trends in the Reserve Bank on a continuous. Every time the employment statistics come out, we do a note on what we think about the labor market, but we do not determine the labor markets. Labor markets is the responsibility of the Minister of Labor and Employment.
No, thanks, Governor. And I think let me also acknowledge the presence of Keda Avela, our NEC member, Comrade Pinky, and Comrade Nomoya in our midst. I see there's a hand from Comrade Orefile, and then there was hand from Comrade Onge. I'm not sure that hand is still up, Comrade Onge. Is it still up? Comrades, this is the last round. We'll only take 3. So we're not going to take follow-ups. I saw Comrade Pink, you acknowledge Maikeda, if you are still here, our NEC member. Then we only have Comrade Onge and Oratile. In the chat, Comrade Osama Zwai and Sango, can you help us? I saw questions in the chat. And then we'll close the session, comrades. I will just do the summary and then give Comrade Emmanuel to close for us. Comrade Osa?
Can you hear me?
Yes.
I think that the governor has covered most of the questions that had come up inside the chat. So I think we can proceed with the questions or the hands that are up.
All right, thanks. Comrade Oratile, can you come in? Comrade Madisa.
Thank you, Chair. Greetings to the South African Reserve Bank Governor and to all comrades present to this call. Can you hear me, comrade?
Yes.
Okay. Governor was asking, does the governor think that one day, hypothetically, will the South African Reserve Bank be nationalized and belong to the state? Thank you.
Okay. Okay, Governor, it seems that we have.
I'm here.
Comrade. Oh, okay.
Yes, I'm here. Thank you very much, Comrade Awadia, and greetings to all the NEC members who are present in this meeting. Greetings to your guest. Greetings to everyone in this panel. My question actually speaks to having that we experience the unemployment rate that consistently is increasing above 30%. And then that which speaks to the low growth limits and also the ability to stimulate demand without risking the inflation. So I want to understand if we cannot employ because unemployment in South Africa disrupt our lives, especially us as young people and those who are in the middle class who are trying to make a living. So I want to ask the governor, is it not possible that to employ the very same strategy that was used during COVID-19 to ensure that we relieve our people from debt? Because if you can check on the stats, and recently there was a study that was established that young people are dying because of depression, and if you were to check out of those cases, it's because of they are in debt. So is it not possible that the governor, that we cannot employ the very same strategies that we have used during COVID-19 to ensure that at least we relieve our people from the crisis that we see now? Thank you very much.
Gavin, I think now we are fine with the question. Can you respond, and then we'll wrap the session. Thank you.
Well, I think the issue of nationalization is that hypothetically, there is a private member's bill in Parliament. I don't know if it carries. If it carries, then that would mean that the bank would be nationalized. Suffice to also say that as comrades think about this thing, you know, this thing of nationalization has been driven by one particular foreign shareholder who believes that if the bank is nationalized, he can invoke the bilateral investment treaty in Germany and say that this has been expropriation and that he would like valuation, and what he is after are the reserves of the country. So as you think about this thing, just bear this thing in mind. This thing just came, and this particular shareholder had been active in South Africa, going to the unions, coming to our AGM, and with all of that stuff. And I know that in the end, we would go to conferences and say that, well, this is our resolution. And I just want to say, this particular shareholder had been driving this from the time that the late Tito Mboweni was governor. He had been driving this thing. So let me leave it there. As you discussed, bear that in mind. You know, on the unemployment, I just want to raise this. There is no economy that can create jobs if it is not growing. Economies grow because they have got a package of policies that are driving growth. And so in the period between 2002 and 2007, there were a number of growth strategies that were followed in South Africa. First was the microeconomic reform strategy driven by the Department of Trade and Industry. And later, by 2005, was the Accelerated and Shared Growth Initiative of South Africa, as GISA. Those policies meant to get growth to 6% and sustain it there. Growth did rise. We didn't quite get to 6%, but we got to 5.4%. I want you to look at that period. During that period, for every 1% growth in GDP, the South African economy created 0.7% growth in employment, which basically means for a 5% growth, we were growing employment by 3.5% per annum. So if you want to be creating jobs, we should be talking about the growth policies. And so that strategy, as GISA, was discarded in 2009 for reasons that you can always discuss with the political leadership. It was discarded in 2009. And of course, subsequent to 2009, we also came with the new growth path and the National Development Plan. and they were all talking about also increasing growth to 5.4%. But as it so happens in South Africa, the ink had hardly dried, and we started a conversation about whether the plan is appropriate or not. And one of the gripes of the National Planning Commission had been that there are lots of things that were supposed to be implemented to drive growth that were agreed but had not been rolled out. And so I am saying all of these things because you can't then just think then that you can then have a central bank with an instrument of interest rates and monetary policy, then having to go and drive these things. We do not have to, we don't need anybody to prove it to us as South Africans that we can grow this economy. We have shown we can grow this economy. We have shown that when this economy is growing, it creates jobs. That is what we need to do. And lastly, for a message from me, for the young people, this notion that we sitting thinking we should create jobs, sure. But we are also creating a nation of job seekers. We should be asking the question, should this nation be talking about creating businesses? Because it is through the creation of businesses that we are creating jobs. So when we're talking about the intervention for young people, it would be, how do we support young people to start their own businesses? Many of you would come out of school or out of university, and what? We must be producing people who come out of institutions of higher learning thinking about, I am going to create a business rather than I'm going to be looking for a job. And the question that comes is, what kind of policies do we put in place such that it enables young people to start their own businesses? So, Chairperson, over to you. I thank you at this stage for the extensive engagement and the questions, and thank you very much for giving us the opportunity to present to young people.
Thank you so much, Governor. Thanks to every comrade who have joined. We've had more than 100 people, young people joining the webinar because of our limit for our Zoom. So we could only accommodate that 100. The young people, Governor, they want to be involved in the economic direction of the country. You've seen yourself the robust engagement and the interest thereof, of how then do we make sure that we keep the conversation going. The good thing about this conversation, Governor, is that some of the points we have made even on the addresses that we have made in different universities. The fact that the Federal Reserve Bank of America includes employment, it's something you've articulated yourself. It's not something that the Youth League is manufacturing. It's something that is there, it's something that is happening. What is happening in India, where they are focusing on economic, the developmental mandate, where they include funds for previously disadvantaged areas, including SMME. Hence, they have innovations within India. It's something that is there, and it's something that we are also acknowledging what other Reserve Bank are doing. And the good thing about this conversation is the fact that you are saying, look, Youth League and young people in South Africa, if you can be able to make sure that this particular discussion is going to Parliament, where the decisions are taken and the amendments of the Constitution are taken, and you amend this particular mandate and include, remember, as the Youth League, from the conversation and from what we've said and what the SG have said, we are not saying the primary mandate of the Reserve Bank is wrong, and we don't agree with it. We appreciate it, and it's what has kept South African rand to be at to have the high strength that it has maintained over time. But we're saying it must be expanded to include employment, like what is happening in the US. We're not saying it must be a cut and paste, Gavin. We're saying it must be something that is having South African characteristics, and the conditions thereof of South African economy are taking into consideration. So we appreciate your robustness. And I see in the chat they're asking the shareholder you were talking about. I don't know why comrades wants the name. So maybe Mahlatsi and your colleagues can drop that name in the shareholder if you allow, because comrades were actually fascinated by the name of the shareholder who speaks about nationalization. But the good point that you are raising, which the Youth League we appreciate, is that nationalizing it and not nationalizing it will not necessarily affect what we want to achieve. What we want to achieve is an amendment to the mandate to include some of these critical aspects to it. New Zealand did try, but the conditions and the economy of New Zealand is not the same as South Africa. Like what you've just said, that what you are trying to do as the Reserve Bank of South Africa is to try to navigate on the condition of the South African economy. And we're saying as young people, we would appreciate a mandate of the South African Reserve Bank in moving forward to include some of these particular components that we're alluding for, on top of the very excellent work that you are doing of price stabilization and making sure that our financial institutions are internationally recognized and they continue to function promptly. So we thanks for that, Governor. We'll keep the conversation going and we'll take this conversation towards our parliament. Where we felt that you didn't give us a good indication, we wanted to hear from the Reserve Bank that actually having employment as one of your concerns is something that is practical, is something that is done in the US. And you also acknowledge that fact. Because when you speak as a Reserve Bank, South Africans, in particular young people at times, they feel like the Reserve Bank is pushing against that particular approach that is working in the US, where employment is part and parcel of the concerns of the Reserve Bank. And we're not saying the results of that concern would be similar or replica of what is happening in America. We will understand that our economy and our structural issues are different to those of the US. But as young people, when we see that even our monetary policy authority also takes the issue of employment very serious, as is even enshrined in the constitution, it will give us hope that ultimately one day unemployment is going to be a thing of the past in South Africa. That's the argument as young people who are bringing, Calvin. I hope you understand it in that context, our argument. And thank you so much, comrades. We hope you will take this conversation to lower structures, the provinces, the regions, even the branches and the VTs, so that we keep the conversation going, so that ultimately, come the next election, we have the majority and we go and amend that constitution to include these parameters that we're talking about. The governor, as things stands, we know his hands are tied. He has to execute the mandate that is actually in the constitution currently, and we can't blame him for that. He is executing the mandate as it is stipulated now. And every South African, in particular, comrades of the ANC, they know that the constitution of this country is something that we abide into. Where we have issues, of course, we must take it to the right structures and the relevant structures for those issues to be addressed. We can't blame him to do what is within the mandate. For that, continue to do that, Governor. Execute the mandate as stipulated. We will try, as the Youth League, from our side, to lobby for the amendment of the mandate to include it, so that next time you also execute that particular mandate to your utmost ability, as you are doing with price stabilization and exchange rates and all the other work that you continue to do. Impressive. We are happy with the Reserve Bank and how the institution have been stabilized. We've seen other institutions being destroyed, but this institution has not been destroyed. It kept its mandate and its relevance and the international respect. Thank you so much. I'm going to give Comrade Mongwe, our coordinator, to close the session, and then the meeting is adjourned. Thank you so much, Comrade Mahlatsi, Comrade Nimrod from Reserve Bank. We really appreciate Comrade Sango from our coordinator, our spokesperson, Comrade Zamakanyas, Comrade Osama Zwai from our ETC, and all our ETC members, NEC that are here. I see Comrade Nomoya is also here. He told me that she's also in the council, but she's also here. So we appreciate the dedication from our NEC members, all Comrade Ntomben from our ETC. We appreciate you, comrades. Comrade Mongo, can you come in? Governor, do you want to name the what you call before I give Mongo?
Well, we didn't want to, but Mathati has posted an article that might give people an idea. It's in the chat.
Okay, Governor. Thank you so much, Governor. We appreciate your availability to us as young people. We see the future is bright, and we believe that we're going to be a country that is different in the future, that is engaged with all the stakeholders in society. Long live, Governor. Long live. Comrade
Thank
Mongo.
you.
Yeah, thanks. Thanks, the convener of our subcommittee, and greetings to everyone who is here and the governor, Mr. Lisicha Khanyang. Mine is just to appreciate the presence of everyone and the participation of those that are here, and of course the well-informed presentation by the governor. Of course, it's a continuous engagement, and we hope that this is not the first and last engagement with yourself, as and when we come across other issues that we may need clarity on or information with. So with that being said, thanks very much. I do not want to waste time. I've been requested to just close